Happy New Year, traders. It is 2019, the first day of 2019. It's January 2nd, 2019 at 8:03 a.m. Chicago time. Another cloudy, gray day here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, allocation is to safety, seeing risk off. Funds flowing to safer items. The Nasdaq getting hit the most here. Nasdaq's down 132 points, down 2% on pretty high volume. Crude is also taking a bit of a beating here at $44.63 on the February contract, down 79 cents, 1.74% down, pretty heavy volume as well. S&P 500 down 38 points, gapping down from Friday's close, which was fairly strong, off 1.5%. The leader this morning, well, volatility futures are up 1% this morning uh, at 25.20. The Bund is up 1.36 points, 136 ticks or 0.83 US dollar, and Treasury bonds are all up. So clearly, flows are to safety and out of risk. We have we're gapping below Monday and Friday's trading. We're trading in the stem or the thin area, the single print area of Thursday on the S&P 500. And that's how we're starting the year out. We're starting the year out with some selling. We didn't quite get to the key target below for this, which was around 24.46 and a quarter. The low overnight's 24.52 and a quarter. Today, some of the things driving us here, we saw mainly China's manufacturing PMI coming in way lower, 49.7 versus 50.2 again. This is the first contraction since May of 2017. If you recall, I think it was 2015 or maybe 2016. The fall of 2016 or the late summer of 2016 is when we had PMI come in from China so terrible that it caused the market to sell off pretty strong. The market's paying attention to this, and then to top that off, we got the Spanish, Italian, Swedish, and European PMIs, and most of those are showing contractions. Italy's showing its third straight contraction, um, and the UK actually hit better. December PMI manufacturing in the UK was higher, the 29th month of expansion, but overall the market's responding to those PMI releases, or so it says. Um, on deck, we also have this meeting between Trump and the legislators this morning with regards to the government shutdown, which I don't know how much impact that's had so far, but it just seems like the market's not really paying attention to it. We do get some numbers today. Where are we? We do get some numbers today. We're looking for uh, market manufacturing PMI final for December at 9:45 Eastern. That's 15 minutes after the open. And Dallas Fed, which doesn't really have an impact. That's what we have remaining for today. So that's what we've got. That's basically the overview. Let's take a look at what we expected on Monday. Monday, the key expectation for Monday was this right here. It's the green plan. Was for us to test higher, to test down into the point of control of around 24.85, but to stay within the range. This is the prior day's high, prior day's low, or low and high. And the expectation for the primary plan was for it to stay in range of Friday, with Friday having been the day that the end of year business gets done in. We did see some volatility on the close on the last day of the year. Remember, Monday was the last day of the month, quarter, and year. We saw some movement to the buy side on quite negative delta actually, and then the market rolled over and came back down. So scenario one, remember scenario one is inside, looking for tests of the point of control and looking for a push towards the prior day's high, but no breach. Here's what we got. Let's make this clean. That's what we got. We pushed towards that. We pushed to the point of control right there. We exceeded the point of control by about 2 points, and we pushed to the high end of the range on the close. So we did basically what was expected, but on inverse. I was looking for a push higher and then responsive later, as a way of continuing um, Friday's trade, retesting Friday's trade. So we got the same idea. The key levels here were spot on, and then from there we closed for New Year's, and we came in this morning, and this is what we've done so far. We've basically We've basically pushed up above Friday's high, tested higher, put in a weak high up here, and then the Asian numbers started coming out, and we went into a nosedive. We had the continuation with Singapore also missing, and then we have Europe coming in and pummeling the market a little more. We have really good volume this morning, about 300,000, and we have a profile that is essentially a B shape, with a key area around 2487 this morning. Seeing this as the over underline, it lines up about 5 points, which is basically the current harmonic for this product, um, within the prior low, and that's the key low volume node and resistance area currently. So that's how things are shaping up so far. Looking at the bigger picture in terms of what we've done, we've been selling and selling and selling. December's had quite a range, and we took a bounce over the last 5 days, 4 days of trading since basically Wednesday of last week. We took a bounce up. We came right back to this low volume area in the 2550s, and established this neutral day down, and then we traded inside of it on Friday, and now we're rolling over. This looks quite bearish to me. This looks to me like we had a bounce back up, and we are starting to make a move towards that low again. That's how things are shaping up. It's not really able to hold on to these higher prices. The main expectation really was for it to continue to drift up into 2585, 2585, and potentially even to 2607 or so, and it's not able to do that. Now, it may turn around and become responsive this morning, buy right back up, and head into this 2494.50 area, this high volume node right here. That is the big magnet in the area. It may do that, but it is looking weak to me currently. So I'm leaning more to the short side, preliminarily at least. Looking at what we're expecting here. What are we expecting for today? get the stock zones back up. All right, hang on, the scale's messed up. So we've got quite a bit of stuff going on in this area. We have some single prints below that we have a lot of we have a lot of structural elements left behind from the 27th. The 27th is a template day. That's the day I'm paying attention to. And so far, I'm seeing that 2485 area is key above. Is key above. The expectation this morning, the primary expectation this morning is for us to turn up, become responsive. We're opening in a gap down versus the prior 2 days. I'm looking for an open auction that gets responsive on the open and pushes into this 24, 84, 85 area. Okay. And then I'm looking for a response down or a push, an impulse down for it to balance, and I'm looking for it to rotate back down. The key target for today becomes this 2446 area right down here. There's quite a bit going on in this zone, and that's what I'm looking for to test this morning. So to me, a push up is really setting me up potentially more setting me up to for a short. If we breach the prior day's range and start to hold into it, in other words, if we push into 2485 and just consolidate up there, especially if it takes a long time, we have a bit of a flag or a zipper forming there. The expectation then is for it to push higher in that scenario too. So, same thing for scenario two, open auction, test down, gets responsive, climbs, consolidates down here, and then comes right back into balance here in the 2490s. Okay, so that would be scenario two, and what we're doing there is basically resuming what we had on Friday and Monday. Those are two opposing ideas. The difference is how do we treat this 2482 to 85 area? That's what's going to determine whether the short, whether we get aggressive with the short, looking for things to roll over, looking for 40 points below, or if it's a grind up back into balance. I'm leaning much more towards looking for a short and looking for the rotation down. Um, Looking for the rotation down more so than for it to grind back up into balance from the last 2 days. Although the auction-wise, a grind towards the last 2 days balance is the more likely scenario in a normal market as it reaches equilibrium again if it gets anywhere close to it. So that's what I'm looking for the two main ideas. I think we're going to continue to get the same volatility we've seen over the last few weeks. It's just the way the overnight session is shaping up, the volume that's coming in, the fact that the VIX is over 25. All these things tell us that we need to continue to trade with a wider stop and wider targets. Okay, so it also means more opportunities throughout the day because there are more rotations, which means that we need to get more picky and be much more mindful of our risk. Kind of, wait for the sweet setups as opposed to trying to catch every move. I frankly don't care if this thing rips up 90 points or rips down 90 points and I'm not on it. It just isn't my trade. And if you're someone who struggles with that, then it's in long term, in my experiences, it'll cost you. It's better to define what is yours and to go with that than to try to catch everything that the market does. I'm really looking forward to this year, expecting a lot of breakthroughs this year, and I'm hoping for the best for everyone here. Good luck today, and let's trade. Take care.